Hi traders, this is Forex James. I wanted to talk to you today about the difference between direction and momentum. Okay, so in this video, I will define what I mean by direction and momentum and how we can use it in our trading. Okay, let's start off with direction. If you've watched many of my videos, you've probably heard me say the word direction many times. Okay, that's one of the first things I look out for before entering into a trade. So what's direction for me? It's basically a direction bias of price, okay? Up or down. There's only two directions and all you have to do is pick one. So what I like to do is usually look up in the upper time frame and from there get my direction bias, okay? So for example, we're trending and the trends seem like it's coming to a halt, okay? Failed to make a new high, made a new low, made another high, okay? Just from this short example, I would probably have drawn a range here. And if we're sitting here right now, if this is where price is right now, my direction bias is going to be to the downside. Why? Simply because we're in a range. Okay? So this is how I define my direction. And I usually like to use an upper time frame as a guide. And now let's define momentum. So if we were to zoom in into this price action here, okay, sorry, just this part here, this up move, right? It's going up in the bigger picture in the upper time frame, but in the lower time frames, the momentum is still going to the upside. All right, this is the top of the range, and as you can see, although I have a direction bias to the downside, right, momentum is still going to the upside. It's very important that we are able to identify the current momentum that we're in right now. Okay, why is that so? Because just simply by having a direction bias to the downside, it does not mean that I'm going to take a short trade right away, especially when momentum is rising to the upside. All right? So momentum refers to the current state of market, how it's moving and how it's approaching this important level here. All right. So to further illustrate my point, I'm going to use an example of a ball that's rolling down a hill. Okay. All right. So as you can see from the previous drawing, we're on the top here. This is the top of the range, right? And you had momentum going up, right? Momentum has to shift so that the ball could finally roll to the downside here. Okay? So direction is down from this point. Momentum finally gave way and heads towards direction. Alright? So imagine the ball going down, gaining its momentum. At this point here, it starts to slow down because there's an upslope. And in this zone right here, this is our pullback zone. Right? Before price decides to further continue to the downside. Okay. So here's a trade opportunity that we could take here. When momentum is going against direction, it's actually a good time for us to enter. We have to be able to identify when the exact turning point is, where momentum would give way again, like in this example, and thus pushing the ball to the downside. Okay, because again, in this area here, the momentum is going up. It's against direction. If you're simply placing a sell limit here, you're going in direction but against momentum. Okay? Basically, this is an impulsive wave and this is the corrective wave. Okay? And along the way here, there are small trends. There are small higher highs and higher lows that are being made. Alright? Until momentum finally shifted. So this is similar to Dr. Alexander's triple screen trading system. You could Google it, it's available online. So basically, the long-term trend, referred to as the tide, is what I call direction. Okay, and this is the intermediate trend, the momentum, the current momentum, which is called the wave. Okay, so the third screen is how he used a method to enter the market. This is how Alexander Elder uses the third screen for. Basically, he uses a trailing stop and waits for the market to break below the low or the high of the previous day. Okay. For me personally, I don't enter the same way as he does, and I prefer using my own methods to enter. So let's take a look at some charts in the next example. I'm going to show you guys how to identify direction, find the current momentum going against direction, and finding an entry point. Okay. So let's dive into the charts that we've all been waiting for. Just use a plain template. And let's take a look at this area here, okay? So as you can see here, imagine this is all we can see, all right? We're at this hard edge of the market, all right? And you see price going up so strongly, breaking it, all right? And coming back to retest. We see that price is going up really strong, and my direction would have been to the upside, okay, after it just broke this area without any hesitation. Okay, so what we want is to wait for the pullback, wait for the momentum to go against us. Okay, so direction is up. We're gonna wait for momentum to go against us. Let's mark it here, and we're gonna find an entry point. So we'll zoom into the H4 right here. Okay, see this area here? Starting from this point, momentum has shifted to the downside. All right. So looking at this level, it coincides with a really strong demand level here. And remember, momentum will go against us before finally shifting again alongside with direction. Okay, so how do we enter in an opportunity like this? There are many ways, okay? First, you can wait for a trendline break, right? Wait for the break of this and you go along with direction. Second, you may just simply enter after you see that the momentum has shifted. Okay, not just when price is going against you, because price may just overshoot this level and just takes out the stops below here, below heading to the upside. So especially for the newer traders, I don't recommend you just placing a limit order in this rectangle. I would advise you to wait until momentum is showing a shift to the upside. Okay, so you could enter somewhere in this zone right here. Okay, just like the ball I've drawn earlier, during the pullback zone, you want to wait for it to shift to the downside again. The third thing you can do is to add an oscillator. Anyone would do. I like using the CCI right there, okay? So you don't just buy immediately when it's at oversold, but you want to wait for price to cross back into the minus 100 line, somewhere around here. All right, and that's where you will have entered into the market. This is a good entry point where you can use a small stop loss and just get a bigger reward out of the trade. Okay, let's take a look at another example. So those are the 3 steps. Okay, identify direction, momentum, finding an entry point. Let's jump into another pair here. We'll try to find a short example this time. Okay, this is the Aussie yen on the daily. Here's a chart of the Australian dollar here. Oops. Just ignore the live trade I have here, okay? Okay, this is a great example here, guys, okay? This is the daily. And it formed a double top here on August 2011. And just like the drawing we had of the ball and the hill, this is where direction would turn to the downside, okay? So my direction bias is to the downside and I'll be looking for shorts here. And let's take a look at this pullback here. So first, we're able to identify that this is an impulsive move, right? See how big the candles are and how much it traveled, how many pips it traveled in such a short time compared to this area here. This is the corrective wave, okay? And it also formed the rising narrowing wedge, all right? We'll be looking to enter a short in the market. Would have probably drawn my line somewhere here. This is where it used to be a resistance and it may turn to support. It's called a swap zone. Okay, and this is the first time price returning to the swap zone. Right? This is also another one here. Okay, so this is a good example because as you can see, although price reacted to this level, it tried to make a push to the downside. But remember, as I've said, momentum is still going to the upside in this corrective wave. Okay, so finally it shifted at this point here, right? That's the turn. That's where the momentum shifted, and finally going back to the downside along with direction. And you may choose to enter your own way. Okay, you may wait for an oscillator to form a trend line break, or just this candle here that gives you a long wick that triggers the shifted momentum. All right, I can't pull up the H4 because the history doesn't go back this much to 2011. So let's find another example. Here's a chart of the pound dollar daily. Okay, we are not in the range like the previous examples. We're simply in a downtrend. Lower highs, lower lows. All right, see this move down here? Direction and momentum are in sync. And then there's a pullback right here, right? It's come to retest this previous supply or resistance, whatever you want to call it. Okay. So again, this is the shift in momentum, and let's use our indicator. And I usually like to go into the H4. Okay, as you can see here, there are many ways to enter, like we've previously discussed. You could wait for a trendline break. You could wait for price to just break below this point, or you could wait for this CCI to trigger you into the trade here. Okay, it's probably at this candle close, right? What Alexander Elder uses is the previous days highs and low. The low is this point. So instead of this pivot, he would enter with a short when price breaks this low. So that wraps up this video of direction and momentum. I hope you find it useful and you could apply it to your own trading. Don't forget to give me a thumbs up if you enjoyed the video, and don't forget to subscribe as well. Take care now.